Welcome to simpleroptions.com. My name is Don Kaufman. Here we are, August 25th, 2015. The only thing I can use to term this marketplace is it's the extreme. Today, just looking at the range today, from high to low in the S&P futures, yeah, that's a fairly extreme move. We are looking at a 90-point range, but that doesn't tell the story. If you miss some of the trade that we saw today, it was all about the rally, okay? But this is clearly, to me, indicative of a much more volatile situation in the face of the heaviest volatility you're ever going to see. You're going to see rip-roaring, okay, rip your head off type rallies, and we saw just that today during the trading session. And not just at the open over here, but during the trading session, the futures had exploded all the way up to 1944 and change, okay, only to see the last hour of trade in the day, okay. It just doesn't do it justice looking at this. These are the S&P futures. They were moving in 4 and 5 point increments in 1 minute. If you look at the last approximate 5 minutes of the trading day, we went from 1885, okay, down, all right, to 1863. That's a 20-plus point move in, roughly speaking, a 5-minute period. The S&P's on staggeringly large volume into the close over here. So again, throughout the course of the day, we've been up 60, 70 handles. Most of the day, we're actually up over 50 points on the futures, only to see the S&P futures tank throughout the course of the trading day, ending up down 4 on the session. The NASDAQ eked out. I mean, if you turned on your screen right now, you'd probably think to yourself, oh, nothing happened today. And you missed everything. Now, let's go over to the volatility futures, because that's what I want this video to really be. The volatility futures, September vol futures, have gotten all the way up to 25.20. They had a low, okay, at a period of time today of 20. We have gone into a complete and total inversion. Again, inversion in the volatility futures. Short duration volatility now is $2 to $3 higher than longer duration volatility. It means you're in the throes of risk. Risk is imminent. There are trade opportunities bubbling up everywhere in this marketplace, especially for those of you that sell premium, know how to manage some of the risk behind that premium over there. Some of the weakest spots in the market today, and this was interesting, okay, or ironic, but the XLF down 1.7%. But the most unusual thing is the XLF ended up down 1.7% with the bonds down. Bonds being down takes interest rates up. So in terms of areas of strength or weakness in marketplace over here, sure, there were other sectors that were weaker, utilities, but nobody cares about the utilities because it's a small market cap. The one we care about is financials. Financials and information technology drive a huge amount of the markets, but they got crushed, outright crushed into today's closing kind of session over here. And again, some of the more disconcerting area of the market is not only the volatility futures flipped over, but again, financials getting hit in the face of the fact that the bonds were already down. The VIX doesn't do anything justice, okay, other than the fact that if you look at the VIX right now and you realize, well, what the heck, it closed down $3.74. I get that. But you have to realize the VIX was coming off, okay, of one of the largest percentage moves in the history of markets. So the VIX has been down substantially, okay. In my mind, it being down $4 is extreme, okay, in the fact that it moved that far up. The VIX actually had a low on the trading session today of 28, took back off to the upside. We're closing here right at about 37. That, ladies and gentlemen, is a range on the VIX over there. If you're kind of into the extremes of the marketplace, I am. This is where, again, I kind of made my career in trading, is around extremes in the marketplace. I actually put together a class quite some time ago, and I've been sitting on it for a while, waiting for risk to kind of reveal its ugly head. It has. We're going to do a class this Wednesday, August 26th from 8 to 10 Eastern Standard Time, simpleroptions.com/risk. What am I going to talk about? I could get into hedging, okay, how you can mitigate risk. But I got to be honest, by the time I get to class tomorrow night, it could be all over but the crying. What I'm going to focus on extensively in this class is the opportunities that present themselves, okay, when markets get these levels of extreme movement. So one of the things I'm going to talk about a little bit about volatility futures, how to read those, preparing for volatility crushes, IV percentiles over there, and I'm going to throw a little bit of a curveball at you as reviewing the PowerPoint presentation. I'm actually going to talk about burst iron condors. It's a different version of an iron condor than you may ever have been used to before, but burst iron condors. Enjoy it. Class is going to be tomorrow. Again, simpleroptions.com/risk. My name is Don Kaufman. Thanks for joining us here at simpleroptions.com. Bye-bye.